The rumor is that Palantir helped with the hunt for Osama bin Laden.
Hello there. This is Lincoln W. Daniel with bullacademy.org. Today, let's talk about Palantir. This video is a part of a portfolio review requested by a longtime patron of the channel, Taiwo. So if you're listening, Taiwo, thank you for being a patron. And if you're not a patron yet, become a patron and request videos, portfolio reviews, and chat in our Discord channel. Join us over at patreon.bullacademy.org. And if you enjoyed the video, don't forget to like, subscribe, and share. Now let's jump into this video.
Palantir is a company that's valued at nearly $1 billion, but not that many people, including those inside of Silicon Valley, know what it is. What is Palantir?
In this video, we will discuss the history of Palantir, its mission, what it has achieved to this point, how it plans to grow its business, and how we may value the stock of the publicly traded company. Peter Thiel named the mysterious company after the Seeing Stone in Lord of the Rings. A Palantir was an indestructible ball of crystal used for communication to see events in other parts of Arda, whether past or future. Why was Palantir founded? Palantir was co-founded by Peter Thiel with the goal of supporting Western governments, especially the USA, in the artificial intelligence race against their adversaries such as China and Russia. What does Palantir do? Palantir's first set of products and services are used by government intelligence agencies, health organizations, armies, and police departments to fight terrorism, battle infectious diseases, win wars, and prevent civilian crime. This is what Palantir refers to as the operating system of government decisions. Palantir's second set of products and services, Foundry, are tailored for commercial organizations to collect, process, and analyze data in order to make better operational decisions efficiently. This is what Palantir pitches as the data operating system of organizations. How does Palantir work? The company leverages machine learning and data analysis algorithms to detect unusual or suspicious patterns in large data sets in order to identify, predict, and report conclusions and outcomes. These products and services enable organizations to collect data, process data, analyze data, and use patterns and connections from the analysis to make better operational decisions and predict outcomes. However, Palantir's processes are pretty manual, requiring teams of humans behind the scenes to clean, input, and interpret data.
They're part of Palantir, a startup in Palo Alto, California. For the last 5 years, the company has been building sophisticated data analysis software that last year was used to expose a network of suicide bombers originating from Pakistan.
Timeline. Peter Thiel, co-founder of PayPal, incorporated Palantir in May of 2003. Palantir has spent its first 17 years as a private startup identifying and growing its customer base and establishing itself as a leading intelligence technology and services provider. In its next chapter, now as a public company, the team plans to find stability in its revenue, work towards sustainable profitability, and do whatever it takes to ensure the Western governments win the next frontier, the battle for artificial intelligence dominance.
Palantir went from being what you could see as a niche player for the intelligence community, highly classified intelligence community, to what you could call the platform upon which data analytics are done inside and outside the US in the course of 10 years.
Where does Palantir operate? The newly public company is headquartered in Denver, Colorado, after opting to leave the quote, increasing intolerance and monoculture of Silicon Valley, according to its CEO in 2020. The US-based company operates in over 40 countries with a heavy preference for Western governments and their allies. Palantir, unlike other large tech companies, proudly refuses to operate in China because the country and its Chinese Communist Party is a clear and persistent adversary of the USA and their allies. To explain why and what this could mean for the company's bottom line, Palantir says the following in its S-1 filing with the Securities and Exchange Commission, the SEC. Our leadership believes that working with the Chinese Communist Party is inconsistent with our culture and mission. We do not consider any sales opportunities with the Chinese Communist Party, do not host our platforms in China, and impose limitations on access to our platforms in China in order to protect our intellectual property, to promote respect for and defend privacy and civil liberties protections, and to promote data security. Our decision to avoid this large potential market may limit our growth prospects and could adversely impact our business, results of operations, and financial condition, and we may not compete successfully against our current or potential competitors who choose to work in China. This is a well-noted risk to the company's financial success. Who founded Palantir? Peter Thiel, a noted conservative, incorporated Palantir in May of 2003. The CEO and fourth co-founder was Alex Karp, a proud progressive and college roommate of Peter Thiel at Stanford Law. The earliest co-founders who engineered Palantir's prototype are former PayPal engineer Nathan Gettins and Stanford University computer science students Joe Lonsdale and Stephen Cohen. Market. Palantir's target market is the group of 6,000 companies making at least $500 million a year in revenue. These are the government agencies that defend their countries and private sector companies that dominate their industries and want to hold on to their lead. The market size of the government unit is about $63 billion, and the commercial unit is estimated at $56 billion. Customers. As of the first half of 2020, Palantir has 125 customers, with their average customer accounting for $5 million of their revenue. The company's top 20 customers account for 67% of the revenues, which is a questionable rate of customer concentration. The revenue split between government and private sector customers is about 50-50. The CIA was one of the earliest and only funders of Palantir with an investment of $2 million. Now, Palantir is used by the FBI and the NSA for the war against terrorism, but also against illegal immigration with ICE, the U.S. Immigration and Customs Enforcement Agency.
We went from being a small company to a company that powers most of the West and its key institutions, including in Homeland Security. And so there are really important questions. Under what conditions can you use the software? Who can be surveilled? How does the surveillance happen? How is the data managed? And what is the consequence of surveillance?
Police departments like the NYPD and the LAPD leverage Palantir's predictive technology for preventative policing. That's just a fancy way of saying police are using our most advanced technologies to spy on and profile citizens in order to make educated guesses at who may be a criminal in the future. Where have we seen this movie before? Furthermore, the NYPD, as any good friend would, referred Palantir's first corporate customer, JP Morgan Chase. JP Morgan uses Palantir's Foundry software for monitoring employees that might go rogue and for fraud detection. However, that partnership ended in scandal after the software was used by JP Morgan's special operations lead to spy on its top executives. What a shame. Then there's Chrysler, which uses Palantir's technology to detect potential faults in car parts. Airbus leverages the software to respond more quickly to production problems. BP leans on Palantir's big data tools to analyze oil drilling data to increase efficiencies. Furthermore, Palantir won some new customers during the COVID pandemic. The Department of Veterans Affairs, National Institute of Health, and Britain's National Health Service signed up to fight the spread of the highly infectious disease. Palantir helps these agencies as well as the CDC track the spread of the virus and better allocate resources to help mitigate damages. Thanks to their deep data integration with their customers' operations, Palantir's products and services have high switching costs that should help them keep their customers around for long into the future.
Alex, the single biggest question that investors ask about this company is 17 years in, while you may have an operating profit, the company unto itself is still not profitable. So walk us through what the path to profitability looks like.
Financials. Palantir has never reported a profit, but let's take a look at the revenues. In a recent press release for their fourth quarter earnings report, the company shared some good news on their revenue growth, saying, in 2020, we generated $1.1 billion in revenue, up 47% year over year. Our average revenue per customer was $7.9 million, up 41% year over year. Our average revenue from our top 20 customers was $33.2 million, up 34% year over year. In that same report, we learned that in 2020, the company's number of customers generating more than $1 million, $5 million, and $10 million in annual revenue grew year over year by 32%, 54%, and 50% respectively. Nonetheless, Palantir's revenues are unpredictable due to the nature of their custom deals with customers and rigid sales requirements. The good news is that the company's revenues have been growing consistently since 2018. In 2019, Palantir's revenue was $743 million, which was an increase over the $595 million they achieved in 2018. And in 2021, this year, Palantir expects to grow their revenue by over 30% from 2020. If they can achieve the minimum mark of 30%, they will bring in about $1,420 million this year. Valuation. Now let's take a look at Palantir's valuation history. In early 2014, the company was valued at $9 billion, with Forbes stating that the company's valuation made Palantir among Silicon Valley's most valuable private technology companies. In January 2015, the company was valued at $15 billion after an undisclosed round of funding with $50 million in November 2014. In late 2015, the company's valuation rose to $20 billion after closing an $880 million round of funding. In 2018, Morgan Stanley valued the company at $6 billion. This was roughly a 10x multiple of their 2018 revenue of $595 million. On the closing day of their direct listing on the public market, September 30th, 2020, Palantir was valued at $21 billion with a share price of $9.50. That was about 21x their 2020 forward revenues. Also, that share price was about 31% greater than the reference price of $7.25 that Palantir provided. That reference price would have valued the company at just $14.5 billion. But as we know now, investors were more excited about the company's future than Palantir thought. After trading as high as $45 per share on January 27, 2021, the stock ended the day of April 2nd, 2021, trading at $23.07 with a market valuation of $42 billion, which was exactly double its value on its IPO day of September 30th, 2020. Valuation projections. Now let's look at some projections that might help us understand the future value of the company's stock. If we take Palantir's lowest revenue projections of $1.42 billion in 2021 and apply the price to sales multiples from 2018 and 2020, we can get to a reasonable range for the company's future fair valuation, given that they've been growing at roughly the same pace. With a 10x multiple on revenues of $1.42 billion, we get to $14.2 billion in market capitalization for 2021. Now, if we hike our price to sales multiples to 21x, we could expect Palantir's market capitalization to end 2021 at $29.82 billion. This is a 29% decrease from its current valuation of $42 billion. That would take the stock down from $23.07 as of April 2nd, 2021 to about $16.38 per share. This is still a healthy 42% increase over its 2020 IPO day closing valuation of $21 billion. Furthermore, this is a generous 106% increase over the reference valuation of $14.49 billion provided for its direct listing in September of 2020. Most investors would take that as a big win, so I hope you do too if you're investing in the company. For reference, the S&P 500 does an average of between 7 and 10% growth each year. So 106% growth over a year is pretty good. Given that the company's offerings are part software and part manual processes that require teams of humans in the background, it's hard for investors to determine how to value the company. The question that Palantir leaves us asking is whether we should value it as an advanced software company or a consultancy company.
Alex, one of the other questions people ask is how to comp your company, meaning what are the comparables? Should this be considered a technology company, a SaaS company, or should this be considered a much more traditional consulting company? Can you speak to that?
Maybe we should just settle for the hybrid and figure out how to value that. Criticisms. Unpredictable revenue model. In the risk factors section of their S1 filing, Palantir says, our sales efforts involve considerable time and expense, and our sales cycle is often long and unpredictable. Each deal needs to be custom tailored to the customer and needs to be priced perfectly to win the contract. This expensive sales process lowers profits and makes projections of future revenues unreliable for investors. Unclear business model. As we discussed earlier, investors are unsure of how to value the company and who its main competitors are. This adds to the risk investors take if they choose to invest in Palantir. Then there is the fact that the company's contribution margins are terribly low. According to their S1 SEC filing in 2019, the firm generated just 6.7% contribution margins. That's revenue minus variable sales expenses for their products. For comparisons, let's look at some comparable companies. Booz Allen is a consultant firm with expertise in analytics, digital, engineering, and cyber. In the company's own words, we help businesses, governments, and military organizations transform. In contrast to Palantir, Booz Allen had 10% contribution margins in the same time. Then there's SAP. SAP is one of the world's leading producers of software for the management of business processes, developing solutions that enable effective data processing and information flow across organizations. In 2019, SAP had a contribution margin 5.7 times higher than Palantir. Finally, there is public perception. Palantir software is used by police for spying on citizens for predictive policing, which largely affects minority neighborhoods. The company even recognizes this as a notable risk factor to its success. In their S1 filing, they express the following. Our reputation and business may be harmed by news or social media coverage of Palantir, including but not limited to coverage that presents or relies on inaccurate, misleading, incomplete, or otherwise damaging information.